Bitcoin just dropped 45% from the top. And no, that's not a typo. Accounts are getting wiped out, people are panic selling at the bottom, and the digital gold hedge just behaved like a tech stock with a caffeine problem. So today, we're going to talk about what actually broke, who's getting crushed, and what this crash really means for your money going forward. Welcome back to the comment section with Thomas Paul. Let's skip the hype and go straight to the pain. Here's the setup. For years, Bitcoin was the hero of every "if you'd bought $1,000 in 2013" meme. Best performing asset of the last decade, best performer of 2024. Then, almost overnight, the script flipped. From the all-time high, Bitcoin is now down about 45%. That's not a little correction. That's the market taking your portfolio behind the barn. Liquidations are blowing up leverage positions. People who borrowed to buy Bitcoin are getting auto-sold at the worst possible prices. Even some of the biggest whales are sitting on billions in paper losses. And if you opened your app and saw your account bleeding red, yeah, you're not alone. Here's where things get interesting. This is not just people got scared and sold. The selling is being driven by big picture forces, not TikTok traders. We've got higher for longer interest rates, stretched valuations everywhere, and investors quietly moving into "don't blow up my retirement" mode. In that world, Bitcoin is trading less like a safe haven and more like a leveraged bet on optimism. And then add the strong dollar. Bitcoin's sales pitch was simple. Fiat bad, money printer go brr, buy digital scarcity. But when the US dollar suddenly gets stronger, your dollars actually buy more stuff. That makes "escape the dollar system" a much harder slogan to sell. If the dollar looks good, demand for alternative stores of value doesn't. But it's even getting worse, because the thing that helped send Bitcoin to new highs is now accelerating the crash: ETFs. When money floods into Bitcoin ETFs, those funds buy real Bitcoin and prices spike. When that money reverses and investors pull out, those same ETFs are forced to sell. Fast. That selling pressure hits the market like a fire hose, pushes prices down, triggers more stop losses and liquidations, and you get the classic stairs up, elevator down chart. Here's the twist. The good news is already used up. ETF approvals? Already priced in. The big institutional adoption story? Mostly priced in. Hopes of easy money coming back? Also priced in. But the risks, regulation, political pushback, uncertainty around how governments treat crypto, those are still hanging over the market like a dark cloud. And here's where things take a step further. Bitcoin also failed its big PR test as a crisis hedge. When markets got shaky and gold ripped higher, Bitcoin didn't shine. It fell. If you bought it thinking, "this will protect me when everything else breaks," this drawdown was a rude awakening. Analysts aren't calling this a random shock. They're calling it a confidence problem. People are asking, what exactly is Bitcoin in my portfolio? Is it a hedge? Is it tech? Is it just vibes? Quick personal note here. When I was about 12, my parents trusted a very confident bank advisor, lost most of their savings. No dramatic shouting, just a very quiet dinner table for a long time. That's when it clicked for me. Markets don't care how good the story sounds. They care about risk and reality. Bitcoin is having that moment right now. But then the unbelievable thing happened. The old critics suddenly sound less crazy. Warren Buffett and Charlie Munger spent years saying Bitcoin produces no cash flow, no yield, and depends entirely on someone else paying more than you did. Whether you agree or not, this crash is exactly what that criticism looks like in real time. Price with no anchor. On the other side, you've still got hardcore believers projecting huge long-term upside. Some former skeptics now admit Bitcoin has a role, maybe as a kind of digital financial instrument. The gap between "it's going to zero" and "it's going to the moon" has never felt wider. That uncertainty is exactly why this thing swings 50–90% like it's nothing. And if you're thinking, wait, hasn't this happened before? Yeah. This kind of volatility is normal for Bitcoin. We've seen multiple cycles: hype, parabolic run, brutal crash, long, boring sideways grind. Then everyone pretends they knew the next rally was coming. Past recoveries don't guarantee anything, but they do explain why long-term holders aren't panicking as much as the leverage crowd. But then he said this unbelievable thing. People started asking if one giant holder blowing up could nuke the entire market. Names like Michael Saylor and MicroStrategy get thrown around like they're a ticking time bomb. Here's the boring, important detail. Most of their Bitcoin is financed with long-term convertible debt, not some margin loan waiting to be liquidated at the next dip. That doesn't mean there's zero risk, but the one forced sale will send Bitcoin to zero tomorrow story is exaggerated. Same with quantum computing fears. Is it a theoretical risk to cryptography long-term? Sure. Is it why your portfolio is down 45% right now? No. If quantum ever becomes a real threat, Bitcoin's code can be upgraded. That's not today's problem. Today's problem is regular humans taking on too much risk because line go up. Here's where things get interesting. So what should you actually watch from here? 3 big things. First, macro. If interest rates stay high and the dollar stays strong, that's a headwind. Bitcoin trades like a risk asset. When people want safety, they move out of risk. Second, regulation and politics. We're in a world where big tech, AI, crypto, and elections are all colliding. Governments want control, tax revenue, and stability. If regulation comes in clear but fair, Bitcoin could benefit from legitimacy. If it comes in hostile, that's more downside pressure and less speculative demand. Third, behavior. Watch ETF flows, on-chain data, and leverage. If ETF outflows slow down, if liquidations ease, if you stop seeing "I mortgaged my house to buy the dip" posts, that's healthier. Markets tend to bottom when most people are numb, not when they're still screaming in group chats. But it's even getting worse. If you're feeling overwhelmed by all of this and thinking, "I just wanted to invest without losing my mind." By the way, this entire video was created with plunged.io, the same system that powers this channel. If you've ever wanted to run a YouTube channel like this without being on camera, that's exactly what it does. It researches topics, writes a solid script, creates the thumbnail, pairs it with an AI avatar, and uploads to YouTube. You stay in control, give feedback, and hit publish. It's not low-effort spam. It's high effort without you burning out. If that sounds interesting, check out plunged.io. Link is in the description. Back to your money. In terms of how I plan to invest, here's the boring, unsexy approach that actually survives crashes like this. First, position sizing. Bitcoin is speculative. That means it should be a small slice of a broader, boring portfolio. If a 50% drop ruins your life, your position was too big, not the other way around. Second, time horizon. If you're in Bitcoin, you either think the network will still matter in 10+ years, or you're gambling. There's no middle. Short term, anything can happen. Long term, your thesis should be about adoption, relevance, and how it fits into a changing financial system. Third, emotions. Overconfidence on the way up, panic on the way down, envy when your friend bought the bottom, regret when you don't. Those are the real portfolio killers. Discipline beats conviction. Surviving beats being right on Twitter. So in terms of my own plan for investing in Bitcoin, here's what I think. Treat it as a high-risk side bet. Interesting, potentially powerful, but absolutely not a safe haven or a shortcut to wealth. If it works, great, the upside could be meaningful. If it fails, the damage should be small enough that you can shrug and move on. And that's the real message here. You don't need to predict every crash. You need to build a plan that can live through them. This is not financial advice. I'm just some guy who watched his parents' savings disappear because they trusted the wrong expert, worked in newsrooms where headlines rewrote reality, and learned the hard way that the boring, patient moves usually win. Now I want to hear from you. Did this Bitcoin crash change how you see crypto, or are you doubling down? Drop your take in the comments. I read as many as I can. If you found this helpful, hit subscribe, tap like so more people see it, and stick around for the next episode of the comment section with Thomas Paul, where we keep calling out the nonsense calmly.